Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. All right, gents, excited about this. We have Karl, Ben, two of the three co-founders of Optimism. OP Labs, Optimism. What am I supposed to say here?
A little bit of both.
A little bit of both.
Yeah.
How we doing?
Great. We're doing great.
Yeah,
very excited to be here.
The office, your vibes are surprisingly high, considering
we named our company for good reason. You know what I'm saying? You know?
Always the optimist. Someone messaged me the other day on Telegram. They said, do you really not understand what's going on in the market? Why are your tweets so optimistic? It's very annoying.
That's how we feel.
Sorry, unapologetic.
Calm it down, guys. We gotta calm it. We're at a 10. We gotta bring it way down. I actually thought we could start on a maybe a more depressing note, and then we can bring it up, which is there's been this, like, I don't know if this is, I mean this in the most respectful way. There's been a reckoning of the L2s, I guess I would call it. I'd love to hear you guys maybe just walk through like what happened here, right? Like, I feel like if you go back to maybe 22, maybe 21, 22, like L2s were like the hottest thing in all of crypto, $5 billion, $10 billion valuations. And now things have been, then, Solana got hot. Now it's hyper liquid. Now it's maybe like back to the ETH L1. So I'd love to just maybe hear like, and then we'll take the audience out of it. We'll do the rebirth, obviously, but walk me through the last couple of years and like how you guys think about what happened to the L2s.
Yeah, I think in short, it's hype meets reality, or crypto goes from being speculative, blue sky, we're going to conquer it all, to actually trying to deliver on its value to end users. And it turns out that delivering on value to end users requires real product development, actually knowing what value you're going to give and generate for your users, and actually providing a good and cohesive product. And let me tell you, if you've been in the crypto space, you know that that is a serious shortcoming of many of those, chains or hype projects that really have not weathered the storm because they don't have those fundamentals. And when you don't have fundamentals, the floor can fall out from under you.
Yeah. What do you think, man?
Yeah, I think I super agree. I think like one way to frame this in many ways is like, crypto has lost the ability to not hold itself accountable to the crazy shit that it does. You know what I mean? And like, there's one framing of this that's very like, what the heck were you doing? And the other hand, it's like, we finally reached a point where people outside of our little bubble were taking us seriously. And it's like, not surprised that you would have a little bit of deflating as you entered the real world of like, not just like meme coin farm, circular dependency virality, and like actually have real businesses that are considering using real products. So like, at the end of the day, like, we came a long way with our industry with some of those vibes, and it got us to where we were. But to take it to the next level, you need a little bit of a reset and be professional.
Yeah, button up that last button.
Yeah, look at this guy.
Yeah. Zip it up, Karl. What do you think? And we'll talk generally about like L2s, and then we'll take it into Optimism. Like, what do you think that L2s got right, and what do you think that L2s got wrong?
Yeah, great question. I think fundamentally L2s got the delivery vehicle to providing a good product correct, right? When you are building an L2, you are extending the capabilities of the L1 and then being able to differentiate your block space to actually deliver a good product to your users. You are focusing on the correct thing because the correct thing is differentiated products that your users want, and not reinventing the wheel of yet another validator set, hype cycle, buy my token, because that is ultimately unsustainable, even if it is wildly successful in the short term. What I think L2s got wrong is it turns out that you need to differentiate your block space. You can't just launch a chain, launch a token, and then throw up your hands when nothing happens, because it turns out to deliver a good chain, you need to deliver a good product. And ultimately, a lot of the hype cycle wasn't doing that.
It was almost like the L2s started being viewed as like a shortcut to the new validator set hot new chain thing, instead of doing what we were intending, which is don't worry about that and just make it easy to build on-chain products, you know, like that. Yeah.
Do you guys think of your customer as like you mentioned user and product? Who's the user? Who's the like your customer is not the end user, right? It's a B2, you're in the B2B to C game.
Yeah. I mean, you know, of course we have OP mainnet that's growing super well. And of course there are B2B relationships there. Ultimately, like you have to take a more holistic view, I think, of these products to really more deeply try to ingest that. Because the answer is like not one size fits all in any way. There are many relationships, and the power of crypto is like, you know, think about like the DeFi Lego world, right? Like you're stacking up all these Legos. Is that like, should you call that a B2B to B to B to B to B to B to C product, right? Like that framing is a little bit reductive for like effectively what you're building is a network of participants. And so you need to apply the product framing and like understand the relationships and the value being provided from one user to another. And ultimately we are sitting at the infrastructure layer that is serving a lot of levels up. That's true. But it's also not one size fits all where you just say like B2B, B2C. Yeah. These are the two options in crypto, right? It's a little bit more complex.
And is your product block space? Or do you think about it differently now?
I think that is probably the closest thing to our product. It is the infrastructure to host block space at minimum, and the ease of creating new block space that is differentiated and enables your product to do whatever your product needs to do, because ultimately block space is as good as what the users are using it for.
If you have to fit it in a word, like block space is a reasonable word, it also begs the question, like what the F is block space, right? And so like, you know, in some cases that is like an asset issuance substrate on which you're providing assets. In other cases, it's a substrate for building financial products. So yeah, it is block space, but it's also like you have to dig a little bit deeper if you want to more deeply understand how people are using the block space, which is where you need to make the product decisions in the first place.
Yeah. Do you have how has your thinking evolved on like what chains, like how chains will look and what chains will be used for? You can go anywhere you want with that question.
I mean, okay, there you can think of, I think it's a natural evolution of most technology stacks from bespoke to standardized to specialized. So this is a very counterintuitive thing, but it's in some ways a reverse cycle from what you would imagine, which is standardized to specialized, or even specialized to standardized, where we started out building really bespoke technology stacks that were hyper fixated on a single use case and only enabled this one thing. For example, payments. That was the first use case for L2s. It was, how are we going to scale up a payments network to global scale? We knew we needed a layer 2 for that. That required a huge amount of technical development to build a single use case solution. Then what happened was we went into the specialized camp, and that is a technology stack that can technically be used for anything. And this is where the trap happened, because you ended up with 100 different clones of the exact same product. We are going to be the standardized block space for all things to all people. That is not differentiated, nor does anyone want that. And so what we're seeing is a transition from standardized into specialized again, but it's different than bespoke, because standardized to specialized means that I can take a general purpose platform and then tune it easily to my particular use case, and I don't need to spend a 5 to 10 year R&D cycle to do it. I can extend it and make it different in a product cycle that is, you know, a few months as opposed to multiple years. So that is kind of the transition that we have seen and that we are really trying to accelerate at this point, enabling everyone to build their differentiated block space across the board.
Yeah. When you guys were trying to figure out, I'm assuming, you know, Blockworks has had these times like really hot, and then like times where we're like, oh my God, like it's all over. And then it's really hot, and then it's all over. Like, I'm assuming at some point in the last couple of years, you went through the, oh my God, it's all over phase. And, you know, you guys seem good right now. But how do you guys figure out what to do? Like, even the like bespoke, specialized, standardized, like I know you have great investors like Andreessen, for example. Like, are you sitting down with like the Andreessen folks and they're like, no, like, Karl, this is actually a very normal thing. Like, was it internal team? Are you talking to the whole company? Is it just the 3 founders? Are you talking to customers? Like, can you just walk me through like how that is maybe a really nerdy founder only question that no one will care about this answer, but personally, I'm very curious how you guys went through that journey.
I mean, it's a mix, right? One of the things that we realized, I think relatively early on, was that we needed to actually build out a pipeline for talking to customers at this kind of scale of like the institutional.
Crazy
like, I know, right? Like,
concept.
it's like, what do you mean we don't just like get in random Telegram group chats and like try to find other anons with, you know,
Ben,
like
we really need a CRM. Like,
I know, yeah. It's like, whoa,
Yeah.
we're growing up, right?
Yeah.
That's back to like the bubble goes down and you
Yeah.
inflate it back up. So, you know, it's obviously a mix, and like the other tricky thing about it is because this more complex network of participants that I was talking about, where it's like
Right.
not just one layer of B2B to C, like there are many routes through the network that a blockchain is building. You definitely have to talk to a lot of people. Like you want to understand what traders are doing at the same time as you want to understand what asset issuers are doing at the same time as exchanges. So one of it was just building the reps of being able to like talk to the serious players that are getting into crypto now and be able to understand what they need. But then you also have to go at different layers of the stack that is not just like the chain, you know, the next chain purchaser, but who they're going to talk to.
Yeah.
And it might sound like, you know, very silly advice. Oh, yes, we talk to customers. We need to talk to customers. But we've known this from day one. But something that I learned recently, which I thought was a great little insight, the difference between a professional world-class athlete and, you know, your average Joe is how incredibly perfected their basics are. And so we ultimately need to get in those reps. And that's how you can actually build something that people want, because this is really hard, and talking to customers regularly, I struggle with that more than most, is really hard.
Yeah.
It's tough. Yeah. It's also like unlearning the like crypto bubble language for things, like starting to understand, like Karl knows this, we're like, so we've spent days like trying to understand the traditional financial system, only to realize like it's actually quite obvious, other than the fact that it does things exactly the opposite of how crypto does it in the first place. And like we were just like assuming that the way that crypto does it is the way that everyone does it. You know what I mean? This is like, it's great. Just being able to translate between those two worlds, super challenging.
Not just finance, like traditional SaaS, go-to-market motions, customer success, BDRs and SDRs, which I actually want to get into that because I met your guys' chief revenue officer, Kyle, who's fantastic. And so I want to get into the transition to this enterprise scaled business now in a second. If someone's listening to this thinking, this all sounds great, but like the L2 meta is over, like L2s are dead, how would you respond to that?
It's like the server meta is dead. Yeah. Okay, what are you building? I think it is true that, selling a server in the abstract to a, hype machine is dead, but you need to sell a product, and to build a product, you need a server. So we're here for you.
Robots and machines will outnumber humans on chain, and peaq is how they get there. peaq OS enables any machine to do business on any chain. It turns machines into autonomous actors and liquid assets with ease, giving robots access to capital and the ability to compound their value. That means funds, allocators, and institutions can underwrite, finance, trade, and route capital to machines the same way they handle any other asset. Millions of new potential consumers for any Web3 service, from compute to storage to anything a machine may need, without a human in the loop. Head to peaq.xyz or click the link in the show notes to find out more. Okay, let's talk about this evolution of optimism now. How do you think about how has the business model of Optimism evolved? And did you guys even think about the business model at the beginning, or were you just like mass proliferation of this block space and eventually the money will come?
I mean, ultimately, we are still in the early innings of crypto adoption, right? Like when we're talking about being taken seriously as an industry in the TradFi world, or just like in anywhere outside of our own little bubble, we are still in the world, even with the proliferation of stablecoins and everything else, we're still in a fraction of a percent of the building the markets for the world. So in some sense, like you have to keep an open mind for things evolving over time. One of the simplest understandings that I think that we came to more recently was that we went, first of all, from having one OP mainnet chain and just like building that out. And that's still around, that's doing really well. But eventually we hit a point in time in which it became time to scale that up. And like now we have built one server, that server runs well. Now we need multiple people to be able to use this server technology, and we're ready for that. So now we're in the world of OP Enterprise, where we have a managed offering where you basically can say, hey, I want a chain, and we say, don't worry, we got you. All the technical details, we'll handle this for you. Just focus on what actually matters, which is
your product, your differentiation.
Specialization, baby. So it's definitely evolved in that way, where we've like added these income streams. Like there's still an income stream of OP mainnet. Now there's an income stream of people paying for this block space for what they're building. I think that will continue to evolve. You know, I don't think we should delude ourselves into thinking like, oh, crypto is being taken a little seriously by a few institutions. Like the story is done, it's written, let's pack our bags. Ultimately, like it is true that the thing to scale out is to build the servers. And so in some sense, we always knew that there would be a lot of these chains. Like that was the point of L2s, was that you take one chain and you extend its security to a bunch of L2s. So that was always in the cards, but I would say that the shape of that as like a business model has definitely evolved.
Yeah. Was Coinbase the breakout deal where you guys realized like, oh, this is a business model providing specialized block space, customized deal to an enterprise that needs block space, which we can deliver to them?
It was absolutely, and it was absolutely a clarification of how these technology stacks are going to be used in the future. And so I will say we definitely had a bit of a unfair head start in that kind of process of actually professionalizing, because it turns out that to sell to enterprises, you need things like SLAs, SLOs, you need all of the actually useful things that the traditional stack provides to its customers. And we really didn't have a way to replicate that. And so it's been
like
building that
forced
muscle.
Professionalization.
Exactly. It is forced professionalization. Now, of course, it means you have to talk to customers to get there, but it's really being guided in this direction, I think, by the demand, by market signals.
Yeah. How has the way that you guys spend your time changed?
Wow. I mean, it changes. The role, I think, of a founder changes literally, every 6 months. You have a new job title. It's like, okay, this is the most pressing thing for the business. Go do that. Go learn how to do product, etc. And I wasn't the one who learned how to do product. I'm living in that research mode a little bit too much. But the kind of useful thing about having a bunch of us is that you find the right hat at the right time, and we evolve, and the business evolves because the business demands fully different skill sets at every stage of the cycle.
I've seen that with Mike and I. We've completely shifted our roles every like 9 months or so. So what are the roles for the three of you right now?
I've been deep in the engineering weeds. It is a real change in the way that we've been building, when we have the advent of these incredible tools. That means that the way that we develop software, the way that we think about securing our software, all of these processes and pipelines, we have massive opportunities to optimize, and we're shipping some really ambitious features that require some deep in the weeds attention. That's been my focus in the past, 6 months, but before that, totally different.
So, I mean, I'm also in a little bit of a research journey right now. I think
So where the customers come in?
we and a very good team.
Yes, very good team. Also, we have a recent habit, which has been the happiest thing ever, where we have a competition of who can bring in customers every single day to the office. And we have like a conversation, a different topic. This person works in finance, this other person works in this other sector. And we're just gaining all of these insights and, piecing it together.
And to be clear, like the important research that I think that crypto has to solve right now is understanding or coming to terms with the different market structures that TradFi has, where they're actually massively beneficial. So I don't mean just like, how can we get more TPS out of the L2? It's like, what can we learn from the market structure of broker dealers being separate from exchanges, and settlement? Like in crypto have kind of tightly coupled all of these things together. And this gives us this very cool, permissionless, decentralized substrate. But there are also like economic inefficiencies that come out of that. And it's very important to learn how the rest of the real world has solved those inefficiencies in practice and try to figure out how to incorporate those.
Yeah, and then how to build a product that can serve them.
Right. Exactly.
And they're like, some things we do better, some things that they do better. And we need to do those things better.
Yeah.
And those are opportunities. Ultimately, crypto has a pace of innovation that is possible that the, other sectors are not going to be able to match. And so, yes, we have these inefficiencies. Yes, we have these crazy inefficiencies in a lot of cases, but we also are patching those holes every day. And the people who patch the holes first get rewarded. And we're trying to enable those people.
Yeah, 100%. Can we talk about the business model of Optimism today? So the way I understand it is it's almost an enterprise SaaS model where you have this great block space that you spent years building, but there's all this other stuff that comes around building on a chain. And so you guys have built this like full stack solution where if someone wants to go build a blockchain, they can come to you and you offer everything. I don't know how much you offer, but you can offer, maybe someone needs a wallet, like you can probably offer that, like, you offer all this stuff.
Block Explorer,
everything.
Sequencing.
So it's a block in a box. So you charge a lot of money for that, which is, I don't know how much, but I'd guess, 5 to 6 figures a month or 7 figures a year. And I would guess your target customer list is actually not 10,000 people. There's probably like 100 to 200 names on a spreadsheet. Is that roughly the business today? It's like an enterprise SaaS with 7-figure annual deals.
Yeah, that's exactly right. And that is something that we have a foundation for because we have experience building out our own chain, building out other chains. It turns out that chains are a great opportunity. They allow you to launch products that otherwise would take an enormous amount of time and effort to launch. However, they can be, if you are doing it from scratch, a massive hurdle. You don't realize how many integration partners you need to work with, how many things you need to stand up, how to balance the various like liquidity incentives, how to make the lending pool work just right with your spot exchange. The token availability is an incredibly important, situation. Fragmentation is massively inefficient. All of those things are learnings that we've kind of accumulated and therefore can leverage in all of these enterprise deals as we are bringing these enterprises on chain. Because guess what? They have enormous potential to reach a large number of users with incredibly useful financial products and other products that otherwise they would not be able to offer, and offer new tokens and new experiences that are just not super feasible unless you're on chain.
Yeah.
And so this has just been we're trying to accelerate that transition. We're not kidding ourselves. We're not the biggest exchange. We are instead the people who know how to take that distribution and leverage it for a new product line.
Huh.
Yeah, and I think for the for the customers listening in on this, only thing we might add is there is still a little bit of solutions engineering in there as well.
Definitely.
Yeah,
where especially now with the regulatory landscape sort of like coming into focus across different jurisdictions, there are different specialized works that we can do to extend the chain technology to meet where they are.
Yeah. For example, if you have a token and you need to apply some kind of compliance controls on your token, the best place to do it is in the sequencer itself so that you don't have any risk of that token kind of spreading and getting into the wrong hands, or, you can impose trading locks where you lock down trading for all of the different pairs for your particular block space. There's so much more customization that you get when you actually have, control over your block space, where you can customize your block space and access the on-chain distribution at the same time.
What else goes into this thing that you're selling? Like, Morgan Stanley, like JP, someone comes to you, shouldn't have said, some financial institution comes to you and says, we want a chain and we want the full stack. We want everything. What's in there? Like a block explorer, get maybe bullet points, like a wallet, what do they actually get? What are the deliverables?
Block Explorer, running the actual sequencer. There are a few tiers, by the way, depending on the throughput scales and things like this that you want. Block Explorer, compliance modules, the sequencer itself. The other biggest one, quite frankly, is just RPC providers. You have to keep in mind that whatever app that you're building on top needs a connection to the chain state to read it all down. And that's a huge industry.
DeFi protocols.
Yeah.
There's a whole laundry list.
You would give them a lend borrow on, they might say, I want a native lend borrow. I want a native DEX.
Oh, yes. This is another thing that we are actively exploring. That is a level of customization that is like absolutely the frontier of block space, which is like, okay, how do we build in native lending into the chain? How do we build in your particular use case?
That's where it seems like things are going.
Exactly.
As people see what Hyperliquid's done. And
Exactly. And so really that is part of this like bespoke engineering solutioning, where really the part of this is, okay, you want a chain, but why do you want a chain, right? If we had the one size fits all solution for you, then we're recreating that standardized non-differentiated block space that has plagued L2s and L1s candidly for, crypto's genesis. So now it's really about, okay, what is the particular use case that you are targeting? And what are those experiences? And then we just happen to know the kind of laundry list of things that you need to actually land that particular beachhead product.
Yeah. And are you guys white labeling other people's products, or are you built like for the an RPC? Like, are you going to like Alchemy or Infura or QuickNote or something and be like, hey, like white label this thing, or the wallet provider? Like, are you? I don't know who provides wallets right now, but
we're the like one throat to choke when you are trying to work with a bunch of providers. And so we have these agreements with a bunch of providers, and then you can come to us and we have, we know how that process goes down and can make
you've got the wallet as a service provider here, and then it goes,
Exactly. And so it's really about collapsing the kind of chain onboarding process from 9 months down to a couple weeks,
Why did you guys go with, so there's two business, if I was in your guys' seat, there'd be two business models that you could, maybe go down. One would be fees. So we will give you a chain, not even going to charge you guys. And as you guys scale, we're going to take a %. The other model is, which I think anyways, so that's one model. The other model is like enterprise SaaS. You can scale, you can make hundreds of millions. We're not going to take any fees. We're going to just enterprise SaaS model. It sounds like you went enterprise SaaS.
Yeah.
Right?
Oh,
And why?
I think one of the things that's really important and that crypto has really undervalued is actually legibility to existing businesses. If we're going to say, hey, we're going to take a percentage cut of all of your MEV, people are going to be looking at us like we are crazy. If we instead say, hey, we have this very predictable pricing model. This is what you're signing up for. You can get control over your infrastructure at any point. But in the meantime, we'll charge you this much per month based on usage, et cetera, et cetera. And that is something that someone can read and understand versus a kind of sneaky, jargon-filled contract that doesn't make a whole lot of sense.
You add up the priority fees and the data fees, and you subtract it by the amount of L1 data providers that we spend, and then you divide by a number, and there's like, what are you talking about?
Yeah, exactly. Yeah. And to be clear, when you are working with an institution, they want to pay you. They want to understand why you are not going to go out of business in a couple months. And so part of having a legible fee model is actually so that you can have a trusting relationship with your customers so you know where the lanes are.
What's been the toughest thing from a culture perspective? Like, Blockworks has seen multiple iterations of the company. They're like, media and events, and then we got into data, and then, we cut the news business, and there's like big cultural shifts that have to happen there. So we felt these big cultural shifts, and they're externally maybe not as seen, but internally they're felt, right? What does that felt like internally?
I think it is a new experience, a new challenge all of the time. I would say that this recent cultural shift away from the kind of hype cycle version of crypto into the kind of enterprise, rubber hits the road version of crypto has been a particularly challenging transition. And ultimately it's challenging for everyone, but it is also a really fun thing to do where you come into the game saying, I want to deliver impact to tons of users. I want to have a real change in the world. I want to make something positive happen. And it starts out as a dream. And then when it becomes real and you start seeing people using your tech stack to do incredible things across the globe en masse, that is a very satisfying experience. It's a different kind of satisfying experience between dreaming about the car and then having the car, but it is an incredibly valuable journey. And I don't know, I feel like the folks who have been along that ride are very grateful for that experience.
Yeah,
you
yeah,
know,
yeah.
at least I am. I don't know. I shouldn't
it's
speak
like
for others.
the transition is a little challenging, but then you start to see the payoffs and everyone can really get aligned behind that and like say, oh, we are having impact here. Like this deal is closing because we are providing a valuable service to these people. That's very positive.
Yeah, and now you have. I saw 2 announcements go live. One was like Bitpanda.
Yeah.
Oh,
Vision
yeah.
Chain.
Upbit,
Giwa.
was that another
Yep,
one?
exactly.
Yeah, yeah.
Upbit.
Did you guys do OKX's chain?
Mhm.
So you guys? Yeah.
Yep.
Okay. So, well, I want to get to the customer stuff in a sec. But yeah, I was talking to the founder of an OG DeFi, app. And he's like, it's interesting. We have almost like 2 sets of employees now. One was the dreamer set, which
Yeah.
is like the initial, and they're here for the dreams and the vision. And then he's like, but we have this new class of employees, and they're actually almost more productive today. Like they're almost better for what stage we're at now. And there's not a clash of, we're rolling off the first set and onboarding the second. So
Yeah. And I think the dreamers can become practical
Yeah.
implementers, and that's in some ways, that's like the point of being a dreamer, is to see the dream manifest. And it's, can't get stuck in the dream cycle.
yeah, true.
I think we're lucky to be on the infrastructure side as well, right? Where these shifts aren't so dramatic as like a complete 180 pivot of the fact that block space exists. Like, yes, block space is a reductive word to use. And what we're talking about is actually getting to the deeper value that we're providing.
Yeah.
But you still have chain infrastructure.
Yeah.
So there's a nice bridge there.
All right, we'll get to customers in a sec, because I want to hear actually like what they need, what they want, what they need in an exchange. Need something different than a fintech. And what does the revenue mix look like today?
I mean,
Like, how do you guys break it out? Is it like you have the fees from the L1, then you have like enterprise contracts, you have like ARR and transactional revenue? Like, how do you, when you show the P&L on a quarterly basis, like how do you look at it?
It's a majority from the enterprise sales motion.
Okay.
And a lot of those deals are, we are growing that business actively right now. Historically, it has been a lot of on-chain fees, but ultimately that has served as being just a kind of bridge to our, what I think is our more sustainable business model long-term. Yeah.
Yeah. The only other thing I would add is like, we have not talked about this yet, but one of the other key product awakening realizations that you need to have is that not everybody needs a chain, at least right now.
Blasphemy.
Like, I know. And I ask me on that's a time frame caveat of right now, right? But we do also have OP mainnet as a really successful chain growing. And so folks like Ether5, for example, just moved their card business over and like migrated 200 million. And so there are fees that come
not without
from
some drama.
Oh my God.
Yeah. So anyway,
moment of silence.
Moving on. Anyway, I was just going to say, like, the reality is that we also do have this OP mainnet product that is block space that we kind of view as a launching pad for people. Like today, Ether5 doesn't need their own chain. In the future, it could be the case that they need one. So you have that transitionary motion to factor in as well.
Why should someone come to Optimism and work with Optimism instead of, I would think that you probably in these enterprise motions compete with like 3 or 4 other chains. Sorry to the folks I'm going to forget here, but it's probably Arbitrum, Canton, Solana, ZK Sync. I'm sure someone's going to send me an angry message because I'm forgetting people, but like those are the folks that come to mind. Like, why would someone come to you? Like, or why do you win these deals?
Oh yeah, 100%. It is the production experience, being able to talk about the ways that we have transitioned people over to their own chains. Greater than 50% of all the L2 transactions. It really comes down to experience and time and reps working with all of these enterprises, making sure that we're able to differentiate their block space for what they need and do that in an efficient process with a long track record of folks that are, that we've worked with.
Yeah. I would also say like, it actually does become the case a little bit that human trust comes back into the picture, right? Yeah. And so like, that's an important thing to provide and actually action on. Like one of my favorite meetings that we have that is a really good place now over the past, 6-12 months is our monthly engineering prioritization meeting, where basically there's all the work that we could do. And we are just ruthlessly going through that list and saying, what is the set of this work? Who is the customer that it's providing value to? How urgent is it? And like, let's prioritize exactly according to that list. So like being able to action and build trust, like with what we build is, I think, super important.
Did you have an investor who told you to do that meeting?
We have been blessed with some incredible executive talent, some of which you have met, that have taught us as
hey guys,
very inexperienced folks how to actually run businesses.
Yeah. What a concept.
Yeah. Harder than it looks, to be clear. And I'm not saying I'm doing it. You know?
And how big is the team right now?
It's like 90.
90 folks. Okay. What's the revenue roughly? Because it's funny, it used to be all on chain, right? And now you have this off-chain revenue, which is a weird thing. Like, you know, the industry is going, like, there's more and more revenue that's happening off-chain, which we're trying to figure out as a data business. Like, how do you figure that out? But I know you can't tell me exactly what the revenue is, but like, what's the range or roughly?
I mean, your estimate is probably about as good as mine. Your description of, you know, roughly what we're charging, et cetera, you can probably work out. But
what are the customers? Like, who are your favorite? Can't pick favorite children here. It seems like you're having the most success with the centralized exchanges.
Exactly.
Is that right?
Yeah.
And why is that?
We have a huge amount of experience working with centralized exchanges, building their own chains, bringing their distribution on chain, enabling the products that they are trying to build. I mean, you have the list.
Yeah, I mean,
well, so Coinbase. Here are the ones I know: Coinbase with Base, Kraken
with Ink,
OKX,
Bitpanda, Vision Chain,
Upbit
with Giwa.
Yep, these are the biggest chains, and we've been doing this for a long time. And in fact, we just have a target list of all of these different customers. And we are going and building relationships with each one and understanding their product needs and enabling them to deploy their products on chain.
Outside of exchanges, who do you guys think let's fast forward Optimism in a year, 2 years. Who's the group that you will start having the most success with outside of exchanges? Because you have like fintechs, payment providers, financial institutions, crypto companies. Let's not forget.
Oh, sure.
Like an EtherFi.
Definitely.
Who do you think is like the second biggest customer? Like, who will be fastest growing customer segment in a year?
I think it's natural to go to folks like fintechs just based on their desire to onboard on chain. However, I will also say that we are seeing a huge amount of interest from traditional financial institutions that are coming on chain with a whole, you know, whether it be NYSE, NASDAQ, ICE, all of these folks are absolutely making crypto investments. And so it's really a matter of when, and, you know, at that time, depending on how it plans out, that could be a massive opportunity for all of Web3.
Yeah. And there's like a little bit of agility factoring that into that equation as well. Like some of the bigger players and like the more TradFi you are, a bit of a slower sales cycle ends up coming about.
Yeah,
you know
I know the game.
So,
we do the same. I know the game.
It's fun.
How do you think about incentivizing people to work with you? Which for what it's worth, like, okay, so I think people know this, but like most of the big deals that people see in public, you know, this chain won this huge deal. There's some payment that's happening, which, by the way, that gets a really bad rap. It's not actually the worst thing. Like that actually is how like AWS landed a bunch of their early customers by paying. Like, it's not actually the worst thing to do that. Gets a bad rap in crypto. What's your philosophy on that?
There is absolutely a time and a place. However, that time and place is on the way out, I would say. One of the things that candidly loses us deals that we, you know, in an ideal world would make, some of those deals are won and lost just by how much you want to pay. And at the end of the day, if you lose a deal like that, then you should feel good, because that means that you are not incurring this massive debt on your balance sheet. We are transitioning, really importantly, to look for, believe it or not, paying customers. That has been a crazy concept.
Yeah,
but candidly, even if it is an extremely exciting opportunity, sometimes you really want to ask, do you want to pay for this? Because that is a signal for whether or not you want the thing in the first place.
Yeah.
Because a lot of folks will be tempted to launch a product just to get the payout.
Yeah. Then the other thing to look out for is like the blank check deal. You know what I mean? There's a big difference between putting some payments between milestones and like incentive aligned success, where like both parties are doing really well. That's a much more synergistic than just like the number on the line to get the signature.
I got a call from someone the other day. They're being offered. I'm sure you're talking to these guys, but they're being offered $125 million by a chain, which is and they're like, should we do it? And I was like, if they're offering you 125 million, you probably got to take that, even though it's a maybe Anyways, what do you think? Why does someone need a chain?
At the end of the day, they need a chain to build a product that is going to be used by end users. And so having a chain is incredibly important relative to just deploying on someone else's block space if you want the distribution to the on-chain user base. That is, and the ability to deploy new applications. So there are like three ways.
Let me make sure I understand that.
Sure.
Because if you deploy on ETH L1,
sure,
you get the distribution of ETH L1. It's actually almost hurting your distribution if you take everyone into your own chain. No?
Definitely, that is the case in the status quo today. That is certainly a bug, not a feature of the tech stack. The vision and the reason why layer 2s were even successful in the first place is actually because you were able to leverage the Ethereum distribution when you deployed your layer 2 in the first place. Now, is that the same level of interoperability as deploying a net new smart contract on Ethereum L1 today? No, it's not. However, is that going to eventually absolutely be the case? Yes, it absolutely is.
So someone should be able to opt into the interop or keep it private in their own.
Exactly.
sanctuary.
And regardless, still be able to connect to the liquidity and tap in with all of these other chains. And ultimately, that is a technical problem, which eventually will be solved both on the financial and also the infrastructure side. But once we've solved that, asking, why do you want your own chain is almost like asking, why do you want your own website? It's because I am a business and I care about owning my own space where my users go, and I can control it, I can customize it, and I can distribute it just as well.
Yeah, I agree. And I also think implicit in this question, like this is like the golden question of like, what does block space mean? Like, what are we caveating away or like silently ignoring when we describe that is something that's really relevant to this conversation as well. And it's like that like a chain for an asset issuer versus a chain for a lending protocol is going to end up in this end game that Karl was talking about, looking like very different things, right? Like they'll both be block space, like because a block space is just like a server, but look at all the different types of servers and ways that servers are used. There's a big difference between a big data backend server and a Twitch, stream out the videos, signal to all the people watching some viral stream or something. Like these kinds of differences matter here. And so it's, you can't be one size fits all.
I think it was, I'm trying to remember I was talking to one of your, maybe it was Bitpanda, and they were telling me that did they end up doing this? They wanted to have a European stablecoin.
Yeah. They're going to be the first L2 with the Euro stablecoin as the gas paying token.
Okay. Small customization probably matters a lot to them.
Yes. Okay. Massive impact.
Yeah. Okay. So what's the actual, so they want to, they have a European stable, is it Circles Euro stablecoin or something else?
I don't remember off the top. The whole thing for them is about compliance as well. Like
so European stablecoin is the gas mechanism for them.
Yeah, exactly.
Interesting.
Yeah. And they're doing like the full MiCA compliance suite. So like they're going all out for the EU regulation.
And we are seeing with the advent of MiCA, Clarity, all of these different regulations, we are seeing a huge amount of folks who would otherwise maybe be a little bit unsure about coming on chain. They're coming on chain, but they need their own chain. They need to be able to customize it so that they can comply with the various regulations that are coming out today.
If you had to rewrite I know the Coinbase deal was the first big enterprise deal you guys did. If you had to rewrite that contract, if you were going back, I want to pull out like what you learned from that deal, other than the generic answer. If we learned how to work with an exchange and we learned how to, tell me what you guys would have done differently with that deal.
I mean, empirically, it is create a deal structure that is legible to traditional financial institutions and other, centralized exchanges and generally just well-run businesses. That would be ideal, and not a deal coded in the language of crypto that exactly, which we grew up in, and obviously we know like the back of our hands, but ultimately is not a scalable way to talk about these enterprise deals.
Written, right?
Exactly. And we were like, okay, now we're learning, this is how we actually speak to enterprises. This is actually what enterprises want ultimately to use our tech stack for.
Yeah. And I'm sorry, I should have caught up on this before, but they're rolling off, or you're still working together?
Yeah, we still work together. The general way that they have taken their chain to the maximum degree of customization. They're making, the base stack, and they're making changes to the protocol and rolled out this really cool Azul hard fork recently. And so they're kind of at the end of the customer lifecycle that we have, started to see, where there's a lot of customers who want to come in. They want a chain as quickly as possible. They don't want to host it. They don't want to make a huge investment, but they want that product payoff. And so then we enable that, and we bring them in, give them their chain, get them set up, grow their chain. Then, like Coinbase, they have a big team of engineers that want to make massive customizations, differentiate their block space even more. And so we're an open source stack. That is why we are open source. It's so that you can make these customizations. And so they're kind of at that tail end of, wow, their chain is so customized that they just want to do whatever they want with it. And so that is ultimately like part of this whole cycle that we're starting to see as we're transitioning to enterprise sales.
Step 1, an EtherFi comes, deploys on OP mainnet. Step 2, they use the full stack. Step 3, if they get to this stage, which probably most won't, but they could if they want to. And
it's amazing that they can. And that is a real case study in what it looks like to be a successful chain.
What do you think of some of these? Anything else on the Optimism business model or customers that you think we should talk about?
Wow, we did go through a lot. My gosh.
I mean, the open source standards is one thing that I would just say is like that is like something that I would say of all the things that we've changed, that is one of the threads that has paid off the most dividends. Even when you look at Base making these customizations, like being at the tail end of that customer lifecycle, we're still able to collaborate with them on like new protocol features that are going to be useful to others and things like this. And so I don't know, shout out open source just because we didn't do it yet.
Yeah, true.
Speaking of open source and decentralization and some of these other topics, what do you think of some of the new chains that have gone maybe in different directions?
Different strategies make total sense. I think it is great to see, again, differentiated blocks. Sorry for being a broken record here, but we need some closed source chains to have a chain ecosystem that's actually highly differentiated. Is the closed source chain going to be the standard, open standard for printing your own chain or creating your own chain? Probably not, but is it an awesome thing to see? Absolutely. And I'm really excited, candidly, to see all the experimentation and people trying to find different use cases for crypto that will hopefully expand the market and the market opportunity. Because once you do make that expansion, once you show that opportunity, that is an invitation for another person, another company to come in and try to run a competitive product. And we want to make sure that we're there and talking with all of them.
Yeah, that experimenting is like super key. And like, when we were all in a little crypto bubble together many years ago, I feel like the idea of a permissioned chain was this like thing.
Yeah. Well, it's because enterprise blockchains had one wave of complete failures in 2017.
Right.
Blockchain, not Bitcoin, and yeah.
And the reality is like these are like 2 points that are very far on extreme ends of the spectrum. And like going back to what I was saying earlier, where there are things that TradFi gets right that are just like strictly more economically efficient than what we do in crypto. these are the middle grounds that these experiments are trying to tease out, which is super relevant. Like it's super, super useful to think about, okay, you have a chain that is more public, that is settlement, than a matching engine that is a little bit more private. Like that kind of nuanced take is not where we were in the failed 2016, 2017, 2018, enterprise permissioned, write your validator set into a, database here. So it's super important to like find those middle grounds. They will become useful products.
Yeah. Is there anything that you've learned from, who should we pick here? From Solana, Hyperliquid, or Canton that you said, I actually really like the way that they do this. We should think about doing, maybe our version of that.
Absolutely. So first off, I think, Hyperliquid, for example, one of the darling childs of crypto today, is really showing that you can build a competitive kind of exchange that is decentral, is Web3 on chain, and really can provide a good user experience. And so that is kind of opening up a new design space for, it's related to the thing that we talked about earlier with all of the enshrined DeFi, with all of the enshrinement and customization talks. It's really created a new surface area and de-risked that surface area to then provide even more sophisticated on-chain products that maybe people wouldn't have thought were possible previously. Canton is obviously definitely similar in a sense. We're going to have many chains. They're all going to connect. And, I think it's just something in the water. I think it's very obvious that is the future. There will be many chains. They will be interoperable. They will be a massive network of these differentiated block space. And so really it's just about, enabling that future across the board.
Yeah.
My brain went to Solana for the same reason of enshrine, but it's the same reason, right? As enshrinement. Yeah. So it was like a very interesting decision for Solana to take some of the core primitives, like the idea of a token, and embed that into the, native definition of a chain, as opposed to just saying, it's all smart contracts, your tokens, your everything is smart contracts. And this is probably an interesting trend that, like, it's very interesting to imagine the world in which Ethereum did that. And like, probably Ethereum wasn't ready for that. But when we're talking about specializing, like now that we've gone from bespoke to general, and now we're back to specializing, that is a very, very interesting use case. Yeah.
Let's talk ETH for a little bit, maybe. So Karl, I first heard of you when you were, I think, like pre-Optimism days, doing like research.
Ethereum Foundation.
Ethereum Foundation. And I'd love to just hear how you think about, or how both of you guys think about, like Ethereum, the network, ETH, the asset, like Vitalik, like the whole, the Ethereum Foundation. Like, just unpack your thoughts on Ethereum right now.
I'll give some hot takes. Generally, I think Ethereum is wildly misunderstood by the ecosystem in a lot of ways, and the ETH asset is also very misunderstood by the ecosystem in a lot of ways. And I think it's very natural, but it's really worth stating. So Ethereum, in my mind, hot take, is competitive with Bitcoin. That is its primary competitor. It is a decentralized store of value, maximally distributed, maximally credibly neutral, maximally crops, for example. And the competitor to that is Bitcoin, this, mysterious Satoshi. That is actually a very compelling narrative, a very compelling product in a lot of ways. And that is where the networks go toe to toe, in my view. Now, there has been a rise with the advent of all of this differentiated block space, where it's like, no, Ethereum needs to compete not just with Bitcoin, it needs to compete with Solana. It needs to compete with Hyperliquid. It needs to compete with, the list goes on. And at the end of the day, that kind of competition is actually really, one, not Ethereum's specialty, and two, a losing game. And this is also why Ethereum is going in the direction that it is. And it's going towards decentralization and credible neutrality and robustness and security. And the layer 2s are going towards differentiated block space, fitting in chains across the spectrum, competing with the Solanas, competing with the Hyperliquids, all of that stuff. And so it's really, you can't have it all in one product. You really can't compete with everyone because then you lose to everyone. And so ultimately, that is the kind of misunderstanding. I think the Ethereum, many folks in the Ethereum ecosystem, and look, it's normal. Even companies get really confused about their product positioning and internal, there's internal questions. Do we compete with them? Do we do this? And think about how hard that dynamic is, and then multiply that towards a global decentralized ecosystem of a whole bunch of opinions. It is a little bit chaotic. And so that's why when you go on Twitter, you're not going to get that just, clear cut story, but that's at least what I think is the consistent through line for, the Ethereum and L2 space.
So if you were Ethereum or Vitalik or EF or whoever you want to be, would you stop trying to bring people onto the chain and build on the chain, and you would more try to be like store of value?
The idea of bringing people onto the chain is absolutely not in conflict with being a store of value, but it's just, who are you bringing onto chain and why are they using that chain? Ultimately, layer one is useful for a certain class of things. That class of things is absolutely really important, widespread, and going to have a massively positive impact on the world. Is that class of things literally everything to everyone? Absolutely not. It doesn't make sense. Yeah. And so these are not really in conflict. They're only in conflict when you think about it in a kind of, zero-sum reductionist viewpoint. And then you look at it more holistically and with a kind of little bit more of a growth mindset. And you're like, oh, wait, the pie is way bigger than a single type of block space. It's literally kind of the mantra that I've been repeating. Honestly, I apologize on this entire podcast.
Yeah. Do you, are you in direct competition? Is Optimism in direct competition?
Oh, with Ethereum?
Yeah.
Yeah, that's the most insane thing. And I'm not going to lie. I think it's a Solana psyop. I think originally it was some crazy community members that were like, yo, we know how to take out ETH. We're going to convince them that they're competing with the layer 2s. Divide and conquer. It's the classic strategy, goes back all, way back. So anyway, that's what I think happened. It's from Twitter, you get some crazy stuff. The relationships, that's what matters. Yeah. Exactly.
Yeah. What do you think the role of Vitalik should be?
That's a good question. I mean, his role is a leader. His role is to set the direction, and his role is to make unpopular decisions. Yeah. And that is ultimately a very challenging role, but an incredibly important role. Yeah. And so saying no is the most important thing, right? Being able to say, this is what we are doing. That's where we are. That's our differentiation. That's what we're investing in, and sticking to it. I think that is what Vitalik has been doing and has, and continues to do.
Yeah. What do you think?
I mean, we've had a lot of late nights together on this one. We're pretty aligned. The Solana psyop and what we need to do to prevent it. Yep. Yeah, I think the only thing I might add is to your question of bringing people, does that mean it shouldn't be growing its ecosystem if it's focused on being a store of value? And of course the answer is no, and these two things are not in conflict. They could be in conflict if Ethereum tried to do that so hard that it sacrificed some of the valuable decentralization, good money store properties, right? And I don't see Ethereum doing that, but if it did start doing that, that would be where I start raising red flags. Yeah. Whoa, we gotta shift. But for now, we're getting what we need. It's good.
5 years from now, who's more successful, Hyperliquid or Solana?
Ooh, wow, spicy one. Should I say shout out to Hyperliquid? Is that? I feel like that's kind of the consensus. I mean, maybe it's consensus, semi-consensus opinion, but oh yeah. I mean, Hyperliquid. I'm bullish. I'm also bullish.
Do you feel
Solana.
More competitive to Solana than Hyperliquid? Because you kind of grew up at the same time, more competition, more animosity, whereas Hyperliquid's it's 5 years. It almost feels like a different era of crypto.
Yeah, definitely a different era of crypto. I would say that that's probably true. to an extent, but I don't feel really competitive with any chain. You know, I think it's really about like enabling people to deploy their chains. And so the kind of competition that I feel with a Hyperliquid is kind of more an admiration where I'm like, yeah, that's a good use case. Let's like enable that one. Right. And it's like, that goes for really all of the chains. I want to make sure that, you know, the delta between having a massive distribution and then launching your own Hyperliquid killer is minimal. Right.
Yeah. I mean, we've gone through so many cycles now of like asking that question about two of the hot contenders of the month, like the up and coming
Sui versus
thing.
Aptos.
Yeah, exactly. So like after you watch this story enough, like maybe you want to ask the deeper question of like, where does the equilibrium rise, or will it just always be, you know?
We don't ask deep questions on this show. It's just superficial. This versus that, Ben.
Well, it's like, will there be one winner? Is like, well, you know, markets always are changing.
You can only pick one.
Okay, I can only pick one. Yeah. Then I have to pick Optimism.
Yeah, there we go.
We do it for the short clip on X.
Yeah, exactly. Actually, Optimism competes with Bitcoin. You heard it here first, baby.
He is a store of value.
Exactly.
All right, that's when I transitioned into talking about the token, which is which I'm guessing you guys don't want to talk about, but I have to ask almost less from an investor's point of view, more from a founder's point of view. Like in one case, you have this amazing benefit, which is you launched a token at this peak, like hot time, which is awesome because you get a lot of money, you get a big treasury and a big balance sheet, which lets you do things. Downside is you're essentially a public company. It's tough to raise. It's tough to capitalize the company now. Maybe I might be wrong about that. And it can be demoralizing when something goes down a lot for internal employees and for you guys. How do you think about like, I don't know, just having a token? Like, was it a good idea to have a token? Do you wish you didn't have a token? I'd love to just honest thoughts here.
Definitely. I think it's been a great thing overall. Capitalization, we're doing great in terms of, you know, the morale and watching a price chart and kind of being, you know, having that in front of you. It is absolutely brutal for sure. I know that Jing, she went years without checking the price. And in general, that's been like our kind of sanctuary, is just like, let's focus on fundamentals and not watch candidly the craziness of the market, because ultimately so much of it is just macro. It's just where's the new hotness right now? It's in investing in AI. That is totally fine, but it doesn't change what we came out here to do. So we are moving forward. We have a very clear path ahead in terms of how we actually achieve the goals that we set out 10 years ago to achieve, bring the world on chain, build the world computer, all this stuff. And I think it's ultimately it's a positive thing overall. It can be a distraction. It can be emotionally charged, but you just gotta keep walking through and focusing.
I think if there was a crunch spot where it felt like there's a big runway problem that we have, that would be a lot more painful. But it's like, we're not in that world. It's nice to have the recurring revenue and be figuring out the business model. Yeah. I also think I'm very thankful, and like my answer might change. Like I agree with Karl, but my answer might have changed if we had just become laser focused on number go up, number go up, number go up. Yeah. And that's like sticking to the fundamentals of we're building some decentralized governance and there's some value behind this is dramatically different story than like the course that you see some other projects take, where they're just like, now the token is out and it is the bottom line and it is everything that we are doing, and everything is about a discussion about what's going to happen. And that's not a way to build a sustainable business. Like, it's good in the short term, it's bad in the long term.
One more on the token would be, do you guys think at all, I know you're not focused on the token price, but if you're a publicly traded company, it's really important, I think, for the CEO and the employees not to focus on the price, but you do have a set of people who owns your token and might actually want to buy your token. And traditionally it's called investor relations, and there are IR teams. You do quarterly calls. Do you guys do that? Do you think about it? Not the right time?
Not the right time. Got to stay focused. Got to make the actual business that is the underlying promise of all of crypto actually real, because we are not there.
Okay, maybe getting out of token land and getting away from that. One more question on the customer base. It seems like the product market fit for a blockchain is capital markets. right? So even if, as I ask you, who's your customer? I'm still saying, is it a fintech? Is it a brokerage? Is it an exchange? These are all really a capital market player. So do you guys think that like, blockchains are just good for capital markets and finance? Do you think that it's like, we should at some point talk about AI and decentralized AI? There was a whole gaming thing that completely died. Do you think that comes back? Like, I'd love to hear the use case for blockchains, where you see this go.
Okay, I think crypto has a very particular use case that everyone uses it for. Why? It's because it's the only thing on the market that can provide that particular use case, decentralization. Now, we have paid a price. Whenever you're building software, there's a complexity and capability trade-off. The more complexity, the less capability. The less complexity, the more capabilities you can build. And so I genuinely think that we in crypto have not actually achieved the kind of final form or the realization of the vision. And that is missing. It's because we have to reduce that complexity ceiling so that we can increase the capability ceiling. And so I genuinely believe that we have a future and a path to a no compromises crypto. That means if I'm looking at deploying my application, if I'm looking at putting my IP somewhere, that I would not use a centralized Web2 hosting platform, standard run-of-the-mill database solution, whatever. I would actually lean towards bringing my new IP on chain, deploying there and composing with the broader ecosystem. And it might be something that it's hard to convince the existing builders, but I do think there is a new class of builders, folks that are leveraging AI, that will gravitate towards that if there are no compromises. Now, there are compromises today. We are not there today. To ask, why don't you just deploy your, every crypto social media platform? Again, I'm not proposing we do a crypto social media platform, but all of them have died. And that is, I believe, because it is just not a better platform to build your social media platform on, ultimately. And so that I genuinely do still believe it is a counter opinion these days that composable block space will be a better web platform for all sorts of usage if we can break that complexity and make the capabilities match and exceed Web 2.
So you think decentralized social, if you guys are successful, we should have decentralized social. We should have on-chain gaming.
We should have name all of your read, write, own, best case scenarios, everything. We should have it. And will it look like your decentralized social from the ground up? Maybe not. Maybe it composes in some fancy way with Twitter that your AI bot generates a magical front end customized to you. But ultimately, we need to be a back end. Crypto needs to be a back end for the best web platforms. And I think we have the foundation to be the best platform because we have something that no one else can provide, but we don't have the tech. Soon.
Maybe as we wrap up, I'd love to hear your guys' thoughts about just AI in general. Like, you guys are both engineers, I think, and researchers at heart. Like, I would love to hear your guys' thoughts on AI.
I feel like in some ways I gave. Yeah, you should talk.
I mean, I don't know. Beware. If you want practical advice, we're shooting for beware the slop and beware the hallucination.
Yes.
I mean, the power of agentic engineering, vibe coding, right, is like there, in that you can create massive amounts of code. And oftentimes now the bottleneck is about your understanding and confidence in it. And I think this is the failure mode that everybody gets into. Is just like, oh my God, the 0 to 1 is so dang fast. It's so damn easy. And like, I'm going to just do that 100 more times. And now I'm at 100, right? And ultimately what you need to do is not that. You need to be very thoughtful. You need to be very methodical. How many times have you, like, it's really easy to go from 0 to 1, but you should probably, like in traditional engineering, go from 0 to 1 many times before you actually consider yourself at 1. Like this idea that it's very standard practice that in just traditional software engineering, you end up rewriting code multiple times before you have something that you're really excited about. And yet we go into the world of crypto where you can produce 1,000, or the world of AI where you can produce 1,000x the amount of code. And people are like, oh my gosh, there's so much technical debt here. Well, okay, you got to move slow to move fast. And that is still true of AI. It's just that the moving slow is about your own comprehension and confidence in what is being built in the first place.
Yeah. Ben, Karl, thanks, gents.
Thank you.
Thanks.
It's a pleasure.
Cheers. Thanks, guys.